Well, hello everyone. My name is Roger Scott. I'm the head trader for Wealth Press. Today is June 16th. It's a Tuesday. What do I always say? Let's get into it right now. Let's start with the global data. Then I'll tell you which sector is leading, and then I'll show you some stocks that I like in that sector to give you a good idea of where we're going and where we've been. Also, I wanted to wait till retail sales data came out, and it just came out a few minutes ago, and it ain't pretty. So let's go over the news. Let me give you the expectations, go through the data, and just give you everything step by step. And this is my top to down approach. I start at the top and I work my way to the down little by little. So global shares, well, they rallied Tuesday after the Federal Reserve moved to support markets battered by the corona pandemic. Listen to what they announced. The Fed said Monday that it'll buy individual corporate bonds as part of its previously announced program to keep lending markets running smoothly and allow big employers to get access to cash. That's huge, folks. That's big. The move was the latest reminder that the Fed is doing everything it can to support markets. Central banks have repeatedly come to the economy's rescue, and it was a huge, unprecedented move by the Fed earlier this year that helped put a halt to the S&P's nearly 34% sell-off. That's crazy, 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 crazy. Meanwhile, new U.S. figures are expected to show Tuesday, that's today, that retail purchases climbed 9% from April to May, according to economists surveyed by FactSet. The market would make a partial comeback after a 16% month-to-month plunge in April, the worst such drop on record going back to 1992, and a mid 8.3% drop. So let's see what retail sales look like. Ouch. Consensus was 7%. We're actually 17%. Look at that. It's very interesting. It's actually not, it's a very, very interesting number. Really is. I mean, 17%. Very, very, very interesting. This is positive. This is really, really much better than expected. We were looking at a consensus of 7.5. We have 17.7. That's better than expected. This should cause the global markets to rally. All right. So this is good. Very, very good. That's why I wanted to wait till the news came out to do the report. Now, the Bank of Japan extended its special program, including purchases of commercial paper and corporate bonds, and its lending program for commercial banks to 110 trillion yen from 75 trillion yen. That's a big, big difference. The number of COVID-19 cases is still growing around the world. That's why the market roiled the first yesterday and Friday as well. It was a little weaker because of that. Governments are relaxing lockdowns in hopes of nursing their devastated economies back to life. But without the vaccine, reopenings could bring further waves of COVID-19 deaths. And that's what I am being really, really cautious about. Now, looking at the futures, let's take a look at the futures to see what the market's doing. Pre-open, oh yeah, look at that. I knew the market was going to rally. Yeah, the Dow Jones is up 630 something. The E-mini the Nasdaq is up 150. Things are looking better. Now, if we look at, let's look at our sectors. If you look at the 10 sectors, if you look at the average, technology continues to lead. Consumer discretionary follows, but again, consumer discretionary and technology, they've got a lot of cross, like Amazon, Apple. Is it consumer discretionary? Is it technology? It's a very gray area, unless you're talking about semiconductors. That's why I think they should just put technology and consumer discretionary in one sector and then separate hard tech, like B2B versus B2C. I think that's the best way to do it. But what do I know? You know, I'm nobody here in the big scheme of things. So again, technology is leading on our CSI scan. We have an 11.52. The next best thing is 8.32, and then we don't even have healthcare anymore. We've got materials, which is really bad. But tech and consumer discretionary, they're leading on a 6-month, 3-month, and a 1-month basis. Matter of fact, consumer discretionary is actually kicking technology's butt on a 1-month basis. But we don't look on a 1-month basis. We look at the cumulative, because we got to go back by the 6-month trend, the 3-month trend, and the 1-month trend. It's called cumulative. But with that in mind, we know that tech and consumer discretionary are leading. Let's look at stocks making 90-day breakouts. I love the 90-day breakout. Why? Because the 90-day breakout is a time period that actually gives you an actual chance of seeing a breakout that will continue versus being a false breakout, which is what you get with a 20-day, 30-day, 50-day, and a 60-day breakout. Once you get past 60, between 85 and 105 days, those breakouts tend to be more statistically significant. They tend to have staying power. And I like breakouts that form from a flat top. In other words, I don't like to see a run-up leading to a breakout. I like to see a flat trading range leading to a breakout, then more flat trading range, because that means volatility is lower, gives you lower risk. Let's look at a few, all right? There's a total of 49 stocks making 90-day breakouts. Let me show you which ones I like. Cloudflare. This was one of my recommendations about 6 weeks ago. Don't say I didn't tell you. I did. It's making new highs right now. Cloudflare, very, very good company. Notice how it's almost moving sideways, but making new highs. I love that because then it has a chance of going vertical. Peloton, the interactive, a gym. I love this trading pattern, making new highs, but it's not running up like this. It's in a flat trading range. Let's look at a few stocks doing that. DocuSign, another stock that I recommended about a month and a half ago, making new highs. Kind of extended. I wouldn't be buying it right now. I like these better. I like Cloudflare and Peloton better. CrowdStrike Holdings, look at this flat top. Nice flat top breakout. I'm not even sure if CrowdStrike is in the tech sector. We got iRobot Corp. Let me find some other cool text for you. Datadog. Look at that. Nice little congestion breakout. Electric Arts. Look at that. Nice flat breakout from a flat range. That's looking really, really good. Wayfair is not really tech. It's consumer discretionary, but I like the way it's breaking out right now. It looks good. It had a nice little flat congestion. It's looking to break out. And again, this I wouldn't buy because it's too strong. But this is a nice congestion and it's breaking out. So Wayfair looks really good. Let's see if anything else gets my attention here. Adaptive Biology looks good. Vasco Data Security International looks really, really good. So out of all of these, I like OSPN, Data Security, like that. I like bandwidth. I like this Adaptive Biotechnologies. That looks really good right here. New York Times looks really good, but it's not a tech, but I do like the way it's looking. Again, Wayfair looks really solid. Electronic Arts looks really solid. Datadog looks really solid. DocuSign's a little overextended. CrowdStrike looks great. Cloudflare looks great, and I recommended this right before it started breaking out, like around 19. It's at 30 now. And Peloton is looking good. So those are the top tech or consumer discretionary stocks that are not just going through a 90-day breakout. They're going to a 90-day breakout that doesn't appear overextended, which gives you a much better opportunity for low-risk entries, all right? So I hope that helps, and I love the retail data we're seeing. Now, folks, now more than ever is the time to pay attention to insider buying. I mean, really, more than ever, as massive moves are taking place behind the scenes. And we want to pull back the curtain on what's happening and why it matters. So we reached out to America's #1 insider. That's right, America's #1 insider, and he's got a lot to say. Details that could show you how to copy their trades while pulling you on the path to wealth. Folks, get an unfair advantage. America's #1 insider, massive insider buying's taking place. Let him show you the right way to stock stocks and create a hit list, get you on the right track, get you into the right names, turn your trading around, especially during this market. Click the link below or the button at the end of this video. Get all the details now. You can't miss America's #1 insider giving you massive insider, showing you what insiders are doing right now. That's gold right now. You don't want to miss out. That's how you get an unfair advantage in this market. And when you get a chance, check out these 90-day breakouts on tech and consumer discretionary for low risk. Check this out. Do it now. Don't delay. Talk soon. Have a great day, guys. Bye.